You're holding your first real paycheck, and it's already been robbed before it reached you. $34,000 a year, and the stub shows the gross number on top, then a stack of subtractions under it. Federal income tax, gone. Social Security, gone. All of it gone before the money ever touched your account. You never got to hold it and decide. Everyone watching just had one of two reactions. Either you know that stub by heart, or you haven't looked at one in years because someone else handles yours. Here's what nobody says out loud. The tax code isn't one set of rules that treats everyone the same. It's one machine that runs in two directions. At the bottom, it reaches into your check before you're paid. At the top, it reaches into the treasury and pays before it ever taxes. And the only thing that flips the direction is whether your money comes from working or from owning. Subscribe if you want to see the exact level where the machine stops taking and starts paying you. Because that flip is real, it's legal, and you won't feel it happen. Quick thing before we climb. I put together a free cheat sheet for this whole ladder, every rung and the exact mechanism hiding under it. It's waiting for you in the description and the pinned comment. Go grab it after. Now, let's climb. So start where you're standing. $34,000 a year, and every dollar you make has your name on it before you earn it. Your taxes come out of each paycheck automatically, withheld at the source, so the money that lands is only ever what's left over. You file in April anyway, and if you're low enough, you claim the Earned Income Credit, a refund for working a job that doesn't pay enough to live on. So you'd think the government would leave you alone. You'd think its attention goes where the big money is. It doesn't. If you claim that credit, you're one of the most audited people in the entire country. In 2021, the tax agency audited families claiming it at about 5 times the rate of everyone else who files. And the next year it got starker. In 2022, a household scraping by on under $25,000 was audited at a higher rate than a millionaire. Sit with that for a second. The family living paycheck to paycheck drew more scrutiny than the person making 7 figures. And it isn't because the poor cheat more, it's because auditing you is cheap. Your whole financial life fits on 2 forms, so the agency runs it by mail, automated, no expensive investigators. Auditing a rich man means lawyers, years, and accountants who bill more than the agent makes. So the machine goes where the resistance is lowest, and at the bottom, that's you. And when the letter arrives, you can't afford a tax attorney to fight it. So you either prove a negative on your own time, or you just pay whatever it says. The audit isn't hunting the biggest cheat. It's hunting the person least able to push back. By now you're thinking, that can't be how it's supposed to work. It isn't a mistake. It's the cheapest way for the agency to look busy. You've got no shelter, no deferral, no loophole, because your money is wages, and wages are the one kind of income the code can't hide. So you decide to stop working for someone else and build something of your own. That's supposed to be the way up. It's about to cost you more than the job ever did. Now jump. You start a business, and on paper you've climbed. Maybe $180,000 flows through the company in a good year. But the code still sees you the way it saw the wage. Every dollar you pull out is earned income, taxed at the ordinary rate. And now you owe both halves of Social Security and Medicare yourself about 15%. An employee only ever felt half of that, and the boss quietly paid the rest. So the climb comes with a tax the salaried worker never even saw. By now you're wondering where the famous loopholes are. They're real. They're just not written for you yet. Then you need money to grow, and the government shows up again, this time as a lender. There's a government-backed loan for small businesses like yours. It sounds like help until you look at the price. The smallest borrowers, the ones who need it most, pay the prime rate plus 5%. Scale up to a bigger, safer loan and the same program caps your rate at prime plus 3. Same federal guarantee, same taxpayer backing, and the little guy pays about 5 points more for the identical dollar. On a modest loan, that gap is real money every year, charged to the borrower with the least room to spare. The loan isn't priced by what you need, it's priced by how little leverage you have. By now you're seeing the shape of it. Down here, the tax code and the government's own bank both treat your money as something to take from because it comes from work. Every rule that could shrink your bill is written for a kind of income you don't have yet. You're still feeding the machine. The people above you have crossed a line you can't see from down here. the line where money stops coming from what you do and starts coming from what you own. Cross that line and every rule turns around. Skip ahead. You cross it. Your company takes off, or you go to work running other people's money, and now your wealth comes from equity, not wages. Watch what the same tax code does the moment your income changes shape. Say you founded a company and sell your stake. There's a break called qualified small business stock. Hold it 5 years, and it lets you pay zero federal tax on the gain, up to $10 million, and after a 2025 law, up to $15 million. Not a lower rate. Zero. The wage earner pays on every dollar the day it's earned. You pay nothing on 10. Hold the stock 5 years and that exclusion is total, so the longer you own, the less the code asks of you, the exact reverse of the wage. Or say you run a fund. Your pay is a slice of the profits, called carried interest. By a single rule, it's taxed as a capital gain at 20%, instead of the 37% an ordinary top salary would pay. There's even a rule that you hold the position 3 years to get the deal, written in 2017, as if patience were the same thing as risking your own money. Same paycheck-sized money, taxed like an investment, because the code agreed to call it one. This is the switch. At the bottom, the code taxes what you earn. Up here, it forgives what you own. And the machine that audited the working family 4 times as hard mostly leaves this alone, because now you've got the lawyers who make auditing you expensive. You've got the shelters the wage never had. Deferral, exclusion, a lower rate on the same dollar. You told yourself you just worked harder. What actually changed is the category your money lives in. The agency didn't start liking you. You moved your money to the side of the ledger the code was written to protect. And there's one more floor above you, where people don't settle for a lower rate. They arrange never to have income at all. One more jump. 9 figures, 10 figures, and the whole idea of income disappears. You'd think the biggest fortunes pay the biggest bills. They don't, and the trick runs in 3 plain steps. First, you buy assets that climb, stock, real estate, and you never sell. So on paper, you've got no income to tax. Second, you borrow against those assets, because a loan isn't income, so the cash you live on arrives tax-free. The bank hands you a line of credit against your shares at a rate ordinary people never get offered. You spend that loan like a salary, except a salary gets taxed and a loan never does. Third, you die, and your heirs inherit at what the assets are worth that day, which erases every dollar of gain that ever built up. Buy, borrow, die. The gain is never taxed, not once, not ever. This isn't a fringe theory. When reporters got hold of the real tax records of the 25 richest Americans, their true tax rate, measured against how fast their wealth grew, came out to 4%. Warren Buffett's was 0.1%. Jeff Bezos paid 0 federal income tax in 2 separate years, and in one of them claimed a tax credit for his kids. Meanwhile, the government runs a program that turns a rich person's gains permanently tax-free if they park them in the right zone for 10 years. It's sold to the public as a way to help poor neighborhoods. The average investor using it made over $1 million a year. And this isn't a handful of outliers. Over the same decades these breaks were written and widened, the wealth held by the richest 1 in 1,000 households kept climbing. It went from under 9% of everything to about 14%. The machine has a direction, and it's been pointing the same way for 35 years. At this level, the code doesn't tax you. It partners with you. The withholding that emptied your paycheck at the bottom has become a set of doors that only open for money that comes from owning, and up here you own everything. You never took a wage, so there was never anything to withhold. The machine finally runs all the way in your favor, and it never breaks a single rule to do it. So go back to that first paycheck. The gross number on top, the subtractions under it, the money lifted out before you ever held it. You spent years thinking that stub was just how taxes work, the same for everyone, your fair share. It was never the same for everyone. It was one direction of a machine that runs both ways. Down there, it withholds before you're paid. Up there, it pays before it ever withholds. And the thing that flips it was never how hard you worked. It was whether your money came from working or from owning. The wage earner and the billionaire file under the same code, in the same country, to the same agency. One of them gets audited over a few $1,000s in wages. The other gets a rate a teacher would envy on a fortune he never technically earned and never technically sold and never technically cashed. Same code, same country, 2 opposite answers. It was never really a tax on your money. It was a tax on where your money comes from. And the moment yours starts coming from what you own instead of what you do, the machine quietly turns around and starts working for you.